let's move on then. The International Energy Agency is considering the latest emergency oil reserve release in history to stabilize the markets and the Iran war. Reports say that the proposed release could exceed the 182 million barrels deployed during the Russia-Ukraine crisis in 2022. The moves comes as disruption of the Strait of Hormuz remains, which carries around 20% of the global oil supply. And the Iran war could trigger catastrophic consequences for the global oil market, according to the CEO of Saudi energy giant Saudi Aramco. CEO Amin Nasser warned that the conflict is creating a domino effect across industries, from aviation and agriculture to automobiles, with global oil inventories already at 5-year lows and spare capacity concentrated in the Gulf. Nasser says restoring shipping through the Strait of Hormuz is now critical to stabilize the global energy markets. And while the White House says that the Iran war will ultimately bring down the gas prices for Americans, even as fuel costs surge in the short term, Press Secretary Caroline Leavitt said that the spike in gasoline is temporary and linked to the market fears over the conflict. She argued that once the Operation Epic Fury achieves its objectives, oil and gas prices could fall rapidly. Let's listen in.
Rest assured to the American people, the recent increase in oil and gas prices is temporary, and this operation will result in lower gas prices in the long term. Once the national security objectives of Operation Epic Fury are fully achieved, Americans will see oil and gas prices drop rapidly, potentially even lower than they were prior to the start of the operation. And we will live in a world where Iran can no longer threaten the United States or our allies with a nuclear bomb.
And while the U.S. and Israel launched their heaviest strikes yet on Iran, with the Pentagon calling it the most intense day of the war so far, residents of Tehran described overnight bombardment as the worst since the conflict began, while Iran's Revolutionary Guards warned they could halt oil exports from the Gulf. Yet the markets are betting the conflict may end soon after Trump predicted a quick end to hostilities. And Defense Secretary Pete Hegseth said Iran is badly losing in the war and Tuesday's airstrikes would be the most intense of the campaign against the regime. Let's listen in.
We will not relent until the enemy is totally and decisively defeated. But we do so. We do so on our timeline and at our choosing. For example, today will be yet again our most intense day of strikes inside Iran. The most fighters, the most bombers, the most strikes, intelligence more refined and better than ever.
And Donald Trump has renewed his warnings of a possible friendly takeover of Cuba, saying that the island is facing a deep economic and energy crisis. Cuba is battling severe fuel shortages, blackouts and rationing after U.S. pressure effectively cut off the Venezuelan oil supplies. Trump says that the U.S. could intervene once military operations in Iran wind down. And Russia has told Trump it is not sharing intelligence with Iran during the ongoing war, according to the U.S. Special Envoy Steve Witkoff. The assurance came during a call between Trump and Putin, where Moscow denied helping Tehran target U.S. assets in the region. The claims come even as some of the U.S. officials warn Russia may be providing information that could aid Iranian strikes on American ships, aircrafts and bases. And more on the geopolitics, South Korea has voiced opposition to the U.S. redeploying Patriot air defense systems from the Korean Peninsula to the West Asia amid the Iran conflict. President Lee Jae-myung said that Seoul has expressed concerns but cannot fully block Washington's military decisions. The move could shift Patriot missile batteries from U.S. forces Korea to West Asia. And moving on to some news coming in on the market front, Oracle shares jumped after the company said that AI data centers boom could power growth through 2027. The tech giant raised its fiscal 2027 revenue forecast to $90 billion above the Wall Street estimates as demand for AI infrastructure has been on the surge. A key metric called the remaining performance obligations jumped 325% on a year-on-year basis, signaling massive future AI contracts and reinforcing investor confidence in the AI spending cycle.